Welcome back, everybody. Welcome back, Hex Tribe. Always a beautiful day in the land of Hexaco. We've got 11 cents Hex today. I love the smell of green candles in the morning. And of course, you guys know this guy, Silver the Antidote. He's been around forever. The liquidity guru. He's got his own group going on. Gives a lot of alpha in his own chat room. But I figured I'd have him on because by popular request, I've been asked a lot, and I've known the guy for a long time. So without further ado, here he is. What's going on, Silver?
What's going on, guys? Glad to be here. We got a lot of positive action happening as expected. So Coffee is going to ask me some questions, I guess. We're going to try and give out a little bit of information and take it from there, man.
Yeah, man. So, the 11 cent Hex, I guess we've saw this coming. It should be no surprise. The 10 to 12 cent range was a very strong support and resistance, both on the way up and down. So now you're seeing it back on the way up again. And obviously you could point to the reason for that being PulseChain testnet V3, probably within hours from now. What's your take on that? You think it'll be 2 more weeks, or is it really just a matter of minutes?
I'm gonna stay a little bit quiet on that one. I think it's a lot closer than people anticipate, but it comes down to timing for Richard. So I think it's done. I think it's pretty much ready to go. But it's just about the rest of the market, and when he deems it go time.
For sure.
So he may be expecting a dip in the markets. He may not be expecting a dip in the markets. I think he's pretty bullish now. I think things have turned very powerfully. And I did mention inside my Twitter account as well that obviously his top call was removed, and his whole format has been updated. And it's like, yeah, this is real game time for him. Yep. So this to me is the indicator that the bottom is definitely confirmed. So I'm very strong on that. And I put another tweet out stating it was around about sort of 3 cents, around about the late October, November, early December, where Richard was actually doing a lot of shopping. He was going out there doing lots of pictures with bags, and that was his signal to the community. This is where you want to start loading up. Lo and behold, that pretty much was the bottom, other than about 2 weeks. There's always a random variable that you can always throw out there with. Unfortunately, some guy decided to dump 150 million, which is what sent it right down to that lowest wick. And that was the only opportunity for everybody out there. So we're seeing, volumes are just exploding. We've got all the people out there who are starting to now talk about Hex. You got the Ivan on Tex out there. So we're getting a lot of traction. And I think there's still a lot of people out there who were in cash, still in cash, and they've completely missed it. They completely missed that bottom range. And even though a lot of people were DCAing, they weren't DCAing enough. And they just sat there now with a lot of cash on the side saying, please dip, please calm down. But obviously with Richard's onslaught of it's coming, that's it. Train's gone. Train's left.
I hear you. People will wait all day long for the best possible price. And, at the end of the day, it doesn't matter if you get it 1.7, 2.1. None of that matters when we're at 10 cents. And then you're just stuck there, complaining about the fact that you didn't get the price that you wanted because you were too scared to take that leap of faith. And I know people that, they just wait. There's always a reason not to buy, right? They'll make up any reason of why the price is going lower or why they're waiting off a little bit. At the end of the day, rather than trying to time the market, just zoom out on the chart a little bit, realize that we were at 97% off, and how much better can it really get from that point? Richard did delete that bottom call, so I guess I am kind of leaning towards the fact that he thinks we've bottomed. And so, that's a big deal. The man's not wrong about many things.
And I'll tell you that other driving factor. You tell me your opinion. When that USDC started to depeg, and then everyone was caught on the side again, it's like, okay, I've got the cash. I'm okay. I'm just waiting for that dip. Oh, damn. The USDC just dipped. What do? I need to get into something more safer. And what did they find? Hex, and obviously all the other cryptos. So for me, that was like an amazing, it was quite scary for a lot of people, for sure. But what was really good was, what do people do when all these impacts are happening to the market? They already know the place that they should be, and that's what gave it another fuel and kickstart, and really helped it get on its way towards the 10. So, and as people have been screaming for weeks now, get your DCAs in, start buying, because at each 1 cent increment that it goes past, it will retrace a little bit, but then that's it. It goes and it won't come back down. The likelihood of actually any of the large wallets deciding to exit out now with the news so bullish of what it is, it's now in a sky's the limit type price discovery area. And obviously the factor is, because there might be people that are looking to front run and sell the news, but the problem is the appetite is so strong, and there's, like I say, there's still people waiting, and there's still thousands of other people out there now that are only discovering HEX, right? It had such a negative light for so long, and now that these influencers out there, these big guys, big influencers, hundreds of thousands of guys that are tuning into their channels, they're not going to want to miss out. So you got all the people that have cashed out on the way down, all the way down. What are they going to do? Just sit with their dollars, send it out to the banks, and then have all the issues with the bank structure out there at the moment. Right? It's like, what the hell are you going to do with your dollars anyway?
Yeah.
Like,
the banks aren't safe. Your crypto's not safe. Your stable coin's not safe. You might as well join the winning team. I mean, you Bitcoin, win. That's fine. If you
got no choice.
Yeah. Hey, maybe you like 25% gains on Bitcoin, or maybe you like a 5x on HEX. I mean, you really decide. It's all about perceived risk versus real risk. And the more you can learn about HEX's actual structure, how it's decentralized, it's simply just a smart contract, triple audited, 100% uptime. The risk seems to be lower and lower relative to your knowledge and your education about what you're investing in. If you decide to get into HEX, and that's why I've been really with my videos, I've been trying to get back to the basics, because I realize there's a lot of new people here that don't realize the power of staking, the power of T-shares. They don't realize a lot of these basic things because they've been trained on the fact that crypto is just a casino. I mean, half these people have been trading inside centralized exchanges for the past couple of years. And, even if not, they really just look at coins as these temporary, almost lottery tickets a lot of the time. They don't think about the longer term, and they don't even dig into these dynamics that you do, which I know you just pulled something up, and I want to get into that in a minute.
Yeah.
But what you tend to teach people some of the fundamental dynamics of how decentralized exchanges work, how liquidity works. And so is that what you pulled up right here?
No, that was basically just sort of what volumes and how HEX is comparing in the DeFi space at the moment. And this really is showing the power and energy that is going in from the whole crypto sphere at the moment. HEX is now ranked number 6 in the last 7 days on Uniswap for the volume. 95.1 million in a week.
And the only things above that are stables. I mean, stables are obviously right.
Or Ether, or wrap Bitcoin. So it's like we are in the top big gun territory. And if you look below all the other coins, it's like they're almost waning in insignificance compared. And if the momentum continues, our volume is going to double. It's going to go to 200 million, right? And then it's like we're kind of in that middle league where we're not at that, completely insane numbers, and we're not at under traded where there's just no one really moving in and out of the market. I mean, these ones below 34 million, Matic, right? LUSD, you got this new one up there, Blur, you got ApeCoin. Like these are nothing now. Like we've just completely blown out, and there's a very good chance that, like I say, we're going to get into the 100 and 200 million weekly trading ranges, which means even if there is any large wallets that want to exit, that's going to be easily absorbed. You just got to think about all that other money that's out in the market that's looking for somewhere to go, right? Because there's not a lot of options currently.
Exactly. This is a big deal, guys, for people that don't understand. I mean, HEX is really in the big leagues at this point. Number 6 By volume, yeah, volume is one thing. I know you can't make money on the volume chart, but you can look at that and realize that that's a signal of the attention that's come on to Hex recently. Look at the total value locked in liquidity. It's 26 million, whereas its volume is almost 100 million. So
Yeah, which
it's
is very
basically trading
small.
at 4x what its liquidity is, which is pretty insane. You know, not a lot of coins can actually trade at that high of levels. So while people might complain, oh, Hex is too low of liquidity, you can never sell. Yeah, that might be true for somebody with $100 million, but what do you retail people need to sell more than $1 million at a time for? I know I'm not ever even touching those amounts, so I'm happy to play this retail game because right now it's reflective of the big leagues, the Bitcoin TVL to volume ratios with not nearly as much liquidity in it, and that's a good thing because it just means there's opportunity for you to get in before larger institutions do.
And the other thing to add to that as well, Coffee, would be, well, even if you do have tens of millions that you wish to sell, the demand is actually there to absorb it, just not all in one hit, obviously, because of how the LP pools are set up. So what we try to recommend doing for people that actually are exiting out of the market is not to do market dumps, because all you're doing is harming yourself and what you can achieve, but to actually push it out into a higher liquidity position, giving people that are wanting to buy in also less of a slippage as well. So it makes the charts look a lot better. It's a lot more balanced. It's just the much smarter way to do it, instead of just hitting the market sell button, which basically, if it's large enough, yeah, it's going to implode your stack. But this is telling you, you don't need to play that game. You can do it slowly and gradually, come out, slowly and gradually go in. DCA in, DCA out.
Exactly. Yeah, there's smart ways to go about these things, especially if you're a whale. And we see some sneaky whales, trying to split up their USDC between wallets, but you're always onto that kind of thing. You do a lot of chart or chain analysis, and you're able to
Yep.
pinpoint some of these guys. Either it's the trade tards or it's the actual whales with a lot of real money coming in. That's why I like to follow you, your Twitter at least, and just see what's going on from a high level bird's eye view. For people that don't know, a lot of people might be new here. Obviously, Hex is 10 cents, and that brings in a lot of new people when they see a pump of this magnitude. But not a lot of people might understand how liquidity works. And I was going to pull up just the simple liquidity chart on the
Yeah,
Hex
please.
USDC pair, and maybe just have you explain for a noob, just from the very basics, what we're looking at and why does it matter, and just how to make sense of the whole thing. Give me 1 second. All right. So this is what on the screen right now, guys. This is what Silver the Antidote talks a lot about in his group, in his Twitter, and to many people, it just looks like a random bar chart. But let's break it down for people that don't know.
Okay. So inside of Hex, there's a lot of different pairs which support and create the price ranges. So in this particular one that Coffee's pulled up, it's a Hex and USDC pair, which is on a 0.3% fee bracket. So it shows you how much Hex is for sale, and it shows you how much USDC is on the other side as buy support, waiting to take any of the sell pressure that may come in. And I think people take it a little bit wrong when they look at this, because they get confused with, well, what is up and what is down. So in this particular chart, it's going to be left is going to be price increase, and right is going to be price going down, sell pressure. And this probably isn't the best one to display, because on this particular pool, there's not a lot of liquidity in it. There's quite a decent chunk, I think, in the 1% at the moment as well. But anyway, we'll go with what has been requested. So we can see that there's a big block on the right hand side, and that could potentially be a couple of $1 million waiting at a much lower price range. And then the little red indicator right in the middle is where current price is. And what you'll actually find there is, to the left and to the right of it, it will give you a little total, and it will say how much Hex or how much USDC is on either side of that bar. Now, in order to make the price increase, that would have to be bought out of the Uniswap DEX with a transaction, and that would make the price go up. Now, the way it actually works is the contracts, if it's a reasonable size order, it may take some of the funds and move it into some of the other pools as well in order to give you the best calculated rate. So what you're seeing displayed here, you actually have to really combine it with all of the other trading pairs for HEX at the same time if you're doing large orders, to at least gauge how much your price may potentially move. How's that doing so far?
Yeah, it makes sense. I mean, well, obviously it makes sense to me. And, there are multiple liquidity pools. So I should just backtrack and say liquidity pools are added by the users, right? On a decentralized exchange, there's no central company that's providing liquidity. What is liquidity? It's just other people's coins that you are using to trade in and out of. So they're sacrificing their coins, their HEX, their ETH, their USDC for you to trade in and out of these pairs. So if you want to buy HEX for USDC, well, that USDC had to come from another participant. And, what a DEX does, what a decentralized exchange does, is it just democratizes those liquidity pools. And let's say you're buying some HEX using USDC. That HEX was put up by not just one person, but, a giant pool of potentially hundreds of people. So we've got a couple of different liquidity pairs that you can opt into or out of. You can see the most popular ones. Well, right now, actually, the most popular for trading volume is HEX versus ETH.
Yeah.
The highest TVL is HEX USDC, which is why I pulled it up. But there's an interesting pair with HEX versus USDC on the 1%. That just means that you pay 1% fees in this pool, whereas you pay 0.3% fees in this previous pool. So that's kind of a brief explainer there.
I was going to say, just for the visual, if you could just pull up the one, because it's probably a bit easier for new people to see it, because it's a little bit less jagged in the image. Yeah. So what you'll see is it's kind of in a little bit of a no man's land at the minute, meaning price can kind of be a little bit volatile in between, what is it, about 9.5 cents to about 12, something like that currently. And like I said, this will aggregate between all the other pools as well. But what we're looking at is there's a lot of buy support just a little bit over there, and then there's a reasonable amount of sell support over there as well. So it's just like, if the price takes a big move down by maybe 10%, now the slippage changes a lot, and you can buy with very small slippage. But if there's an aggregated buy of maybe, say, $500,000, now it's going to be in a very low slippage range, but at a higher price. And this is just the way that the DeFi system works, as opposed to when you're buying through an exchange, a CEX, a centralized exchange, where generally the order books are set completely different. So this is a really, really interesting thing to, if you're new out there, to at least try to study, ask questions, and try to learn about this, because of what's happened in the last few months with the exchanges. A lot of us foresee that they have lost a lot of trust, and a lot of the communities out there are only going to deal with working inside of the DeFi area, because at the end of the day, this is where you actually own your coins. You're allowing the smart contracts to use them when you're actually providing LP. But if you're buying, again, you're allowing the contract to work seamlessly, quickly buy or quickly sell, and bring the coin straight back to you. There's no real counterparty risk involved in any of that side, as opposed to what is the legacy side of the centralized exchanges, which I believe is going to be phased out over time.
Yeah. So this is called range-bound liquidity, guys, which means I can choose as a liquidity provider to say, oh, I only want to provide liquidity between this range and this range. And these bars are low on the chart. That means that there's not a lot of liquidity in this range. Low liquidity just means the price can move very, very fast up in the higher direction or the lower direction. So, this low zone means it's going to probably be a pretty fun time over the next couple of days because the price is going to be extremely volatile, but we're seeing a lot more room for it to go as high as 12 cents before we enter a thicker liquidity zone where a lot more people are now willing to sell at 12 cents, whereas a lot more people are willing to buy at 10 cents. Not a lot of people really have liquidity posted in this middle zone, just because I mean everybody's watching the same charts, and liquidity providers are definitely usually they're smarter money, right? They make these moves ahead of time based on consensus of where they think the price is going to go. So it looks like we've got, basically, long story short, we've got a lot more room to go up to 12 cents, I believe, in the next couple of days, especially when testnet launches. And I don't know if you want to give a price. I know I hate being asked, what's your price prediction, but I'm going to pull this on you right now. Do you have a price prediction for any, post V3 launch?
Post. I would say yeah. I mean,
do you think we tap 12 and then go down and retrace?
With the news coming out, it's going to blast past all of that LP in position.
Wow.
Put it that way.
Wow. All right. You guys heard it here.
About it.
You say you think the liquidity providers are just going to adjust themselves accordingly?
Either adjust or get, they're going to lose their supply.
Wow.
I mean, what they're doing, they'd be hoping for it to range inside of their position and not actually break out, and then potentially retrace back out of it and back down in price, so they can just basically make a lot of fees. But the risk that they face is ending up with just a big bag of USDC or Ethereum or DAI or whatever pair it is that they happen to be in.
Yeah.
So that's the risk and the gamble that they take by doing it. But at the end of the day, you do have to have supply, obviously, in a range for the price to move to reduce the slippage. Because if there isn't anything for sale, it's very unlikely the price is going to move as well.
Yep. And that's what's called impermanent loss for people that don't know. It's when the liquidity providers are expecting something to happen, but the price can go against you, so that you end up with much more of the coin that you didn't want and much less of the coin that you did want. And yeah, so people that set these ranges from 12 cents and on, they say, oh, we're going to sell HEX from 12 cents and up, and we're going to buy HEX from 9 cents and below. Well, if the price just keeps going up against them, they're not going to be. Basically, if you're a liquidity provider, you're short volatility, or you're long volatility, I should say. You want the price to keep bouncing around in between a range, because that's where you make the most fees. If the price just keeps going up beyond your range, that's not as good. So you want a lot of trading in and out to make those fees. So it looks like a lot of people are assuming, maybe incorrectly, Silver's hunch is that maybe it's going to keep blowing past this 12-cent range. But right now, that's what a lot of people expect.
Yeah, I mean, you could back that up again with data, and it's not just assumption. It's probability based on how much volume is actually coming in versus how much is being sold over, how many days is this occurring. For example, maybe you're net positive $300,000 of buy pressure on one day, and the next day you're 1 million positive versus the sales. And all you do is add an average of what it is that they're doing over say a week's period. And with the momentum that's growing and the anticipation that's coming closer, you just basically subtract that from what is actually available in the market. And it's only mathematics that tells you there's not going to be enough supply in the higher price band. So it's going to be a first come, first serve that can take what's out in the distance. Because this LP that's being provided currently at the moment, that's provided by one person. There's a few other people involved, but mainly like one account that's doing this. And if that gets distributed out to say 100 people or 200 people, now the only way that LP provider, who's now lost his HEX stack, can actually reposition himself back in the market to try to earn fees is, one, he has to have more supply, or two, he has to rebuy. And if there's not much left up there to rebuy, he's kind of stuck with a bag of, stablecoin.
That would be a beautiful thing to see this guy, whoever you are out there. I mean, it's not like I don't normally wish for people to lose money, but I hope that you have to buy higher, sir. But it's risky business. And I should also say that the charts don't look like this liquidity providing charts, so liquidity charts on Uniswap V2, which is what PulseX is going to be, guys. So for people that don't know, this is not what liquidity is going to look like on PulseX. PulseX is forking the older version of Uniswap, which, if you could see a chart of this, would just simply look like a flat, even distribution, because you'd have to put up the same amount of HEX and the same amount of USDC on both sides. You couldn't pick and choose. And holy shit, we've got a nice little donation right now from Pierre's.eth. Thank you so much. He's got a question for you, Silver. What do you pay more attention to, the 0.3 or the 1% V3, or both?
I watch everything, all of them combined.
Everything, all of the time. He's everywhere. What do you think about all the volume happening on this ETH pair right now? I'm actually kind of surprised that this has the most volume.
Well, the ETH one was interesting because there was that guy that came in, the new Genesis wallet, this first time buyer, that literally just did a market bought 1,000 ETH, just bang down at, I think it was 5.6 cent, and he still had, I believe it was about 10.5 thousand Ether over 2 wallets remaining. So the reason the Ether is interesting, because a lot of the community, a lot of the streamers are trying to go out there and talk to the community, the wider community in crypto, and most of the time they only have USDC or Ether to get in. They don't have any HEX, so that's why the Ether pool is taking a lot of action at the moment, because I see a lot of new accounts come in. There's there's a lot of trade accounts that are coming in as well, because this is opportunity. Volatility is opportunity, and traders like this. But it's also, what are we expecting to happen as we start going into V3 for PulseChain? Are a lot of these people gonna start believing in HEX is actually here to stay, or are they coming in and looking for just quick money? Because generally when there's big news events, and PulseChain is a big news event all over the crypto space, there's going to be a lot of people that will actually buy huge amounts in expectation that this thing does have legs going into the future. And like I say, there's going to be a lot of opportunists that are coming as well. So that's why the Ether pair has started to outperform the standard USDC pair. Also, because the flip side is, people are now coming out of stable coins. They don't want to hold stable coins anymore. And at least by using the pairings of HEX and Ether, especially for the LP providers, when you're earning fees, you're actually earning 2 of the assets that are both appreciating together, compared to one which might just be USDC, which, what I was going to say, stays flat, but it doesn't. Sometimes that goes down 10% as well. So it's a lot of variables involved when we're talking about multiple pools. And
that's very interesting. I mean, it makes sense with the recent volatility in stablecoin not being so stable anymore. Right. Maybe some of the LPs would shift over to ETH, but also for the newbies, it really is the simplest on-ramp, because you don't want to, if you're starting off in crypto and you're brand new, the easiest thing to do is just start with Ethereum, because at least then you have the leftover funds to pay your gas fee with. That's what's outlined on hex.com. If you go to the website itself, tells you to start with Ethereum. Only people that have really been around for a while understand it's, to keep some Ethereum and then go into stables and all that. I want to give a shout out to Ryan Lopez, and OG over here. Thank you so much for the tip, dude. That's very, very generous. Good times. Yeah, cannot complain. Waking up to green candles in the morning is a great feeling. That's why we're all here. So hope you're having fun. Hope you're surfing or doing whatever. I saw some pics of, I don't know where you are in the world these days, but South America it looks like. So have a good time, bro. Cash Plus also, thank you so much. Appreciate the Alpha Silver. Yeah, of course. A lot of people love this kind of stuff, and you can make money on it. So Silver does have a group if you guys are interested.
The group's not really active at the moment. I've closed it down because I need to revamp things. If I'm going to run another one for the PulseChain, there's going to be a lot of things that I may want to start structuring. But yeah,
I hear you, dude. I'm doing the same thing.
Yeah, it's a lot of hard work running those things. So
I'm doing the same thing with my course. I'm about to basically cancel it because a lot of that information is going to be outdated once PulseChain goes live. So yeah. But thanks, dude. Cool, guys. Hey, any questions for Silver here in the chat? And might as well answer them while he's here. Coffee, can Bigfoot get a wrench? He's helping me as a bouncer. Oh, I didn't know we had some trolls in the chat.
Yeah, you're gonna get some of those.
Yeah. Let me here you go, Bigfoot. You are a moderator, sir. Oh, then now there's standard moderator and a regular moderator, or managing moderator and standard moderator. I don't know the difference, so you're managing moderator. Congrats. You did it. All right. How many people do you think will use PulseChain in the first month after mainnet? I mean, that's like an impossible question, but probably, at least as many, take the number of sacrifice wallets, and that's your starting point, right? Plus more, maybe double that. Hundreds of thousands, probably, in my opinion. I don't know. What do you think?
Well, yeah, like you say, impossible question, but just take the follow account of Richard, say 300,000, and then combine that by everyone's got multiple wallets, so it could be 1 million plus wallets.
Yeah, I mean, at least I know at least was it like 250K sacrifice addresses? Double that, that's 500,000. Quadruple that, you're at 1 million. I mean, it wouldn't be that hard to figure out 1 million people in the whole world.
In the millions.
Yeah. I mean, out of the whole world, that's not that many, but in crypto terms, that is pretty epic, guys. How does price discovery work when Pulse and PulseX initially launched to LP have a big play on it? I'll let you take that one if you want.
Well, personally, it's a difficult one to describe because we really want to see what the large wallets are going to do. What is going to happen with if any of the sacrifice funds are utilized? What happens with the OA wallets? Because that's going to set the precedent of everyone else to basically follow, because it's going to be, if it happens, it's going to be such a powerful move that it doesn't matter what you do, because you cannot compete with that type of action. So I would basically wait and see for action before you start to do anything. So it's not even worth speculating on this.
Exactly. I feel the same. And everybody always asks me, what's your pre-bridge swapping strategy, bro? No, I'm like, dude, don't do it. I'm not doing it. How do you feel? I mean, this is just my personal question. Like, I've told people you could potentially set a really safe limit order in the HEX PLS pair in that pre-bridge 48 hours. By safe, I mean, like, if you're not getting 2,000 PLS per HEX, that's, you want to be very, very careful that you're not giving your HEX away for a pitifully low amount of pulse that you're going to be very upset with in a week or two when the dust settles.
Yeah. Personally, I just wouldn't mess around with any of that. There's so much more chance for getting it wrong than there is for just leaving it. And, you're going to have the coins, you're going to have your HEX duplicated. Why take the gamble? Because odds are you're going to lose.
Yeah, that's wise words. Wise words. Yeah, so many people want to try to time this market thinking there's something to do. I prefer just scaling in. If I wasn't already sacrificed, if I had to scale in, I would probably buy into the dip that's likely going to come a month or two after the launch as people take their short-term profit in both PLS and PLSX.
There's going to be a lot of people that do just get wrecked trying to, go in thinking they may know what they're doing or having an execution plan. But in reality, we don't know what seismic shifts may happen. So it's with these sort of things, it's always best to follow the money, and that will set the most safest option for you to follow. If you're going to just basically go in and gamble, because that's all it is, you're gambling on what you think is going to happen. There's a lot of people who have a lot more money than you, a lot more coins than you, and if there's a good chance that maybe nothing might happen for, like, with the large accounts, while they're just sitting back waiting for people to do their thing. I've seen this a few times in other areas, and they may come in and burn you badly, because that's not the move they were going to make, and then they have the power to swallow whatever your position was. So again, that's why I would say just hold fire for a short period. Let things start to settle a little bit. Let all the degens do degens. Maybe they win. Chances are they're going to lose.
Yeah, and don't be upset when you hear about the one guy bragging about how he won, because you're not going to hear about the thousands of guys that lost. They don't like to brag about losing. Okay, so yeah, the winners are very loud, but the losers are very quiet, and there's a lot of them. So Cody Lane says, I don't have a big bag, so I'm just going to either farm the incentive token or buy up PHEX. That doesn't sound too bad. Doesn't sound too bad. He wants to start fresh on PulseChain. Yeah, for sure, for sure. Bigfoot put somebody in a timeout by accident. Well, I don't know, man.
First day on the job, man. Come on.
They've just got to wait their time then and think about what they. If they've been a naughty boy, then maybe they'll learn. All right. I feel like crypto Bigfoot. Hey, dude, when I give you a wrench, that's with great power comes great responsibility, sir. Can we access the interest accrued daily on single-sided staking on PulseX? Like, can you farm the liquidity daily? Do you know the answer to this? I believe it's kind of you need to collect all it at one time. I haven't checked in a while.
I've not spent enough time in there to comment. I'm more on the things that are live at the moment, because for me, any of those things are subject to change. So until it's actually in V3, that's when I'm going to go in and start, having a look around.
Yeah, we'll let you know tomorrow when V3 launches.
Yeah.
Hey, thank you for the $5 tip, Mr. Dr. HP. €5. It's about the same as $5.
Pounds. You guys, you never know what a pound is.
Well, it just hit parity, but like earlier last year.
Oh yeah, true.
Yeah. When do you think the fork will occur? Okay, come on. This question, dude. How many times have you been asked this? It's just like, when do I think the fork will occur? There's literally no way to know. It does make me a bit more bullish after Richard's most recent tweet, basically stating that V3, in his perspective, is virtually perfect. So he's basically assuming that V3 will be a test run just to make that final decision that there are no bugs, everything is all good. But he tweeted verbatim, the V3 launch is a signal that PulseChain mainnet could launch at any moment afterwards. It could be 2 weeks, it could be 2 months. But short of anybody finding a critical vulnerability on V3, it sounds like the devs have done sounds like they've done their part in terms of testing, and now it's up to the greater community to break it. But we are good at breaking stuff, so who knows? Maybe something will come out of testnet testing that will delay things. I want to make a clarification right here. V3 testnet is probably the snapshot. That is not true, sir. Not true at all. A lot of people misunderstand the snapshot, the word snapshot. There is no snapshot, okay? The mainnet launch, the moment the fork happens, the moment that PulseChain splits off from Ethereum, that is the snapshot, okay? There's no earlier snapshot. All right, the moment the mainnet happens is that date. It's all the same. Snapshot, fork, copy, mainnet launch, it's all synonymous, okay? So there's not going to be some sneaky, if you weren't holding on, March 23rd, well, then you're kind of screwed. They're not going to do that to people. So just want to make that very clear. So yeah, man. So what else has been catching your eye in this crazy crypto game lately?
Well, hours and hours and hours at the screen. Obviously, I've got to eyeball a lot of accounts, a lot of transactions, and build up some sort of format of where I think the market is actually going. So that consumes a lot of time. I'm interested with, I caught this article today, which kind of threw me a little bit. The UK has this article where they're talking about the CBDC, and what they're thinking of doing is actually giving everybody £20,000 worth of Bitcoin, as opposed to what is in their accounts already when the system actually goes down. And I was just looking at that and I was like, so it's like a game of Monopoly. So everybody in the country is going to start again, right, on 20 grand.
Well, you can
Whatever's
almost
in
say
your
it's like
bank.
an
Sorry,
airdrop.
it's an airdrop. Yeah, you get an airdrop, but you lost the other one, probably.
Those
So
fuckers.
whatever it is, everybody starts at the same level.
Those
It's like,
fuckers, dude.
come
Like
on,
I kind of called this too. Well, my guess was a little bit different. I was thinking that in America they might say, oh, you can cash in all your regular bank dollars for 1.1, CBDCs, and so all the plebs would be like, oh, that's a 10% bonus. I'm
right.
going over here, and really they're just giving all their money and all their power away to the surveillance state. But hey,
Yeah.
to each their own.
Yeah.
How soon are those CBDCs launching over there?
I think they're planning to do it before 2030. So yeah, we're definitely going to get one more decent bull run at this before that starts coming in. But it's going to be definitely something to take into account. Obviously, okay, what do you do if you're going to you're going to be locked into crypto probably for sure. It's going to be very hard to probably get in and out. Even in the UK, they're shutting down on boards and getting out of crypto and getting back into fiat. I think it's limited now for a lot of the banks. Like £5,000 is all you can send in to your exchange. Obviously, there's lots of other ways that people can do it, but they really are applying the pressure, shutting down a lot of places. A lot of the banks are, having issues, and it's like, obviously it's completely orchestrated with what's going on. It's trying to scare the market, and it's funny that the Bitcoin and Ethereum just reacted the way it did and just took off. It's like, no, we don't give a damn about what you guys are up to out there. We believe in this system, and nothing is now safe apart. I mean, if everything's going to be volatile, you might as well just be in crypto.
Yeah.
At least you own it. So
If it's
I
all
think it's
fucked,
probably
you
going to
might
be
as
a
well hold
very
your own money under your
I
your
think
virtual
it's
mattress.
yeah. But the problem is it's now going to really limit a lot of people who don't have maybe they don't understand crypto yet. Obviously, it's going to become a bit more mainstream, but then there's limits of how they get in. So we're left with all these USDCs, all these stable coins inside of current accounts out there of people that are holding through the bear markets, and they're all going to be very confused now as well, because there's a lot of big channels out there that are still claiming we're in a bear market. This is a bear trap.
Disbelief
Right?
stage. Disbelief.
Yeah, exactly. And that is harming a lot of people out there, which it's is reckless of them to their audience. So at least all of us here in Hex, we're screaming, yeah, this is on.
And that's not
So
to say
we're in the right place.
I agree, but that's also not to say there can't be a correction. We could correct from 12 all the way down to 6. Guys, that's the volatility of crypto. We can go from 6 back up to 30. I don't know, but you just have to be ready for that. And it's if I do believe that we've bottomed, but that's not to say we can't dip. Anyway, Sandy B, the dude, thank you so much for the tip. If Bigfoot times out another active community member, can we bounce him from the club? Asking for the viewers. Yeah, that Bigfoot guy. He's I don't know. He's risky business, guys. Keep an eye on that Bigfoot. He might not even be real. I mean, his name is Bigfoot. All right. Let's see. Obadiah. Thoughts on parity between EHEX and PX? I'm very interested in this, actually. I want to ask you this because I just simply don't know. Do you think there will be price parity between EHEX and PHEX over time?
Well, as has been stated by Richard, he wants HEX to be expensive everywhere. Same price, parity. So this, again, is a question for how the OA and the sacrifice bond and pair. So if they deem that this is what they want to do, and I think there's a very high likelihood that they will enforce this, and it will definitely set a precedent, and it will create a very strong post-chain ecosystem, which then will make it not look like just a copy of Ethereum. It's actually going to be real bonded value all the way through the networks. And we know that there are hundreds and hundreds and hundreds of millions of dollars which are sacrificed, which could potentially be used, which would stem a lot of the potential sell that may come in from liquid bags out there. But I don't think that there would be enough sell pressure from combined wallets to break any of these bonded pairs. However, on the flip side, I don't think they would also put up a large amount in order for the market to take it back. Because if you did a job and you're working and you earned your money, you wouldn't want to give someone the opportunity to earn it back as well, right?
Mm-hmm.
That's generally how it works. And you know, a lot of people, I won't say this one. I'll just leave it there. Yeah.
Yeah, I mean that's good enough. I think it would make a lot of sense if things played out where the liquidity was bonded from the origin address, and it might not. Yeah, this guy's asking, it might just be a ratio of 2 to 1, for example, but then they move in sync with each other. That's really my biggest point of uncertainty is, will it be 1 to 1 or will it be something else? Because I do believe that eventually they'll move in lockstep with each other in terms of.
I'll throw one more thing in there as well. Then,
Sure.
what did Richard say day one of the AA lobby? Don't put all your coins in day one. Everyone's excited. Everyone's been excited for 2 years. All that even though we're saying this now, people are going to go crazy. Okay. They're going to start doing everything all in day one, right? Because they need to get it. They need to click buttons, right? So again, the people who are, more seasoned, they're going to sit back and watch, and potentially the OA and the sacrifice addresses and the daughter addresses, and oh my God, there's so many addresses. You guys have no idea. All right. That's only like, that entity. You then have a lot of other large wallets as well. So sometimes it's better just to let, the maniacs go in, beat themselves up, kill off, part of that tribe. And like I said just a minute ago, someone's going to come in and just rebalance the whole thing. And then you're going to lose all of that, that crazy action that was going on. Just let them play. Let them play. That's what's going to happen, I think, early on. A few days, the big guys won't do anything. They just let everyone, sacrifice themselves gambling.
That's my plan, at least. Yeah, for sure. Fuck, man. Yeah. Well, moving away to more of just like the macro environment, there's a lot of chaos going on, a lot of banks shutting down. This is all good for crypto, it seems, because like you mentioned earlier, people are fleeing into crypto. Whereas, it's basically the banks have been outed as almost trying to do Operation Choke Point 2.0. That was a guy, some guy on the board of Signature Bank basically was claiming that it sounds a lot like the USA, at least, is trying to stifle banking relationships with any crypto businesses in the US. But crypto doesn't care, as long as they can get into their stable coins, as long as they can get their bridge into the DeFi world, that seems to be people's safety net. And so there's also chaos in like the red states. I know Texas and Florida, their governors have already set a bill to potentially ban CBDCs. And it's hard to get away with it. I love America because it's so polarized that you can't get anything done here. And the lack of innovation in politics is almost good because it lets the real innovation happen. But
yeah, I mean, the benefit is you do have some quite strong states. Obviously, I can't speak because I don't know enough about the politics for how things really operate in certain regions. But yeah, I mean, I believe like Vegas, they have like a complete safe zone for certain things. Yeah, maybe Texas and certain other states too. Whether that, I mean, most of the business will probably operate and set up through those areas anyway. I think that's how it works over there. UK is a lot different. It will just be a blanket shutdown across the whole lot. Banks, because banks are all connected and colluding with each other anyway. And, if they don't, they're going to end up with probably being taken down. It's like generally the same principle works for politicians. If they don't abide by the rules, they end up out of position. So yes, the bottleneck is definitely happening. The concern would definitely be the stable coin aspect and how that would be weaponized, because obviously that's going to be an agenda at some point where we know Circle, they're influencing. We got Goldman Sachs, they've already infiltrated the crypto space. We've got the FTX. There's so many high level connections that are now very rooted and entwined into the crypto sphere that I think it's at the time being they're safe enough, but I most definitely think past 2026 these things are going to be very, very dangerous things to be holding, as in the stables, because they're going to be targeted, because they will be trying to compete with what it is that the CBDCs are trying to do. And that is why people have got an early warning now. And that's why they're just saying, you know what? I'm gonna hold my Bitcoin. I'm gonna hold my Ethereum. I don't care what the price is, because it's like I said in a tweet, it's infinitely more than a fiat, and the fiats always go to zero over a long enough time frame anyway. But what you don't want to do is just wake up next day, bang, something shut down, bang, exchange, shut down, hacked, whatever, bang, your bank account zero. Like, this is going to catch and trap a lot of people. So it's definitely something worth trying to look further down the horizon of what's coming and where to set up. And then I think there's a lot of talk as well about, okay, how can we make some form of real decent decentralized stable coin, something that just really works outside of all these other systems? Because I mean, it's definitely beneficial to have some form of stable for those that want to exit, but I think it really comes down to the ultimate goal of all the time that we're using legacy systems, we're not actually solving any of the issues. So the only way we can really move forward is, okay, Coffee, I want you to come around and give me some time, build a house for me or something. I will pay you in HEX direct. And then you can use that as a tradable thing to other people. And that's really how the flow of money works. Money can be any form. Doesn't matter what it is. It used to be seashells, right? Yep. So it's all about what the belief is of it. And I think with how the control structures are clamping down, as long as there is enough education out there, it may only be a matter of time, even if we have to go underground for a while, which does happen. Like, there's black markets, but things are still traded. And I think if enough time passes where whatever it is that the central structures are trying to implement into society, I mean, to be honest, like, if all you're doing is handing out like some little monopoly tokens on a digital thing, which are worth nowhere near what the main balance was, people are going to stand up and go, what the hell is this? This is not what we believed, right? Because the inflation is just going to continue. So I think it's just long vision, seeing where value may be in, say, 5-10 years time, and it isn't going to be in anything that they're providing. 100% on that.
Yeah, I agree. We need to start to move to a world where everybody's accepting true crypto and true DeFi. And it does start with education, right? That's what we're trying to do out here, is just educate people about, taking their power back into their own hands. As far as the stablecoin argument, I've been very confused, because I remember 6 months ago, it was USDT that we were all arguing about. Oh, what if they don't have the reserves? But like now, just recently we've seen USDC depeg by 10%, which is a big deal for a stablecoin. Yeah. It's very scary. Luckily, it repegged based off of, I guess, the confidence that the Federal Reserve said they were going to make everybody whole. But how much more confidence are we going to have? We had 2008, we had 2023 now with bank failures. How many more times can the banks fail before the general public just says, fuck all this, I need to get my money out of here? Now, we do have algorithmic-based stable coins. We've got USDL, LUSD, things that are backed by literal collateral. And that collateral basically is priced in US dollar terms using an oracle. So that provides some other risk, oracle risk of who's deciding the price. For example, if you take out a stable coin backed by ETH, well, who's providing the ETH USD price? But luckily, you can still get some pretty good price ranges by averaging over a couple of different large exchanges. You can get some pretty good oracle prices on that end. But these algorithmic backed stable coins, DAI is almost a hybrid. So I don't fully trust DAI, because DAI is basically fake DeFi, where there's a governance token and there's a small group of people making the decisions. Now, luckily, they've made pretty good decisions in terms of agreeing to allocate their treasury fund towards long-term bonds and things that they see they see what's coming. And so I do believe that the treasury structure of the governance team behind the governance holders, token holders behind DAI, basically the people that hold Maker token. I do believe that they've been making some good decisions so far. But again, you're still kind of trusting the people that hold the Maker token. And to have a significant say in that, you need to buy the token, and not a lot of people can afford to do that anymore.
Yeah, and add to that, what was it that they were doing with the treasury system? They were putting in millions and millions of dollars into a staking ladder, which matures and brings out more of the inflation of the US dollar value. Yeah, it's basically hyperinflation. So they're trying to match and grow with it to create some of that stability in its value. So, and I think the one with the LUSD, correct me if I'm wrong, you have to use collateral of Ethereum, something like 150% or something. Is that how that one operates? And then it will spit out the LUSD on the other side. Is that correct?
Yeah, well, you set your own reserve ratio. The minimum is 110%, but you can go up to 10x collateral or even higher than that. But yeah, so you'd want to set a very safe, over collateralized loan, because essentially it's a loan that you're taking out against your own collateral, giving you a stable coin. So that's one way to do it, which has been working fine in Liquidity platform for a while.
So in the event of the Ethereum that you've been going lower in value, how does that affect what's going on with your position?
Yeah, well, that obviously it puts it at a risk, right? Because all of your coins are riding on the fact that you've provided a safe level of collateral. If the coin dips 90%, you're gonna have to get liquidated. You're gonna have to sell your coins back. Well, so here's the cool thing about these algo stables, though. You keep your stable coins. You just have to sell your collateral. So even if you get liquidated, your collateral's gone, but you're still left with a stable coin that's still worth $1. So it's not the end of the world for you, but the system is arranged so that the people that are buying your collateral are happy to do so because they're getting it at a discount. And then it really just relies on there being enough people to believe in the collateral token and enough people to still believe in the dollar at the end of the day.
Because what I found interesting during that depegging aspect was, okay, what was the sacrifice address doing with their coins? And generally, to watch how the big money was flowing is a good indication that this, with all the variables taken into consideration, this may be the best route. Okay. We know what entities are behind that address, so we know that there's a lot of research and thought that went into these moves. And if you actually look at how much supply there is on the LUSD, and then you look at how much was actually traded out of USDC from the sacrifice address, it was about $850 million. So when I look at how much LUSD there is, that's more than the entire system. So take that into consideration with why the sacrifice may be going the other route. And like I say, if you follow the money, you're probably going to be on the better route of indication of where further money is going to go. I don't know enough about LUSD. There's a lot of other chain things that take my time up instead of trying to find out about these things. But yeah, no, it's interesting. I mean, obviously, if it's something that's worth people learning about, and you recommend it, yeah, I'll maybe do a bit more looking into it as well.
Yeah, that particular platform is probably worth looking into because it exists on Ethereum, and it's managed to survive a 90% dip in the Ethereum price with actually surprisingly minimal liquidation. So people aren't being as stupid as we might assume that they would be. And then obviously this is going to be forked onto PulseChain. It's going to be called Liquid Loans. That's why I'm interested in that particular. We just need options, right? Because how can I? Right now, I'm just scared that I have too much in USDC. I'm like, well, I've got a little DAI, I've got most of the USDC. Am I a fool for not having USDT? Because I thought USDT was the risky one, right? But hey, at least USDT is based in Singapore or Hong Kong or whatever, and it's away from the United States. So that's now starting to seem like a good thing at this point. Hey, thank you for the tip, Crypto Keeper. Not to FUD, but to ask the question, do you fellas believe on history, based on history, that PLS token can hit 1 million users and network effect can 1600x the price. I'm assuming you mean 1600x the price from bottom sec. Call me crazy, but yes, I do believe that. Wait, how is this FUD? This is like hopium. This reads like hopium, not FUD. What do you make of this?
Yeah, I mean, there's going to be hundreds of thousands of people that are going to come over into PulseChain. They're going to have airdrops. They're going to experiment, and that is then going to be talking points. There's going to be probably thousands and thousands of videos that are going to be released into social medias. And as long as things work and there are speculations and there are solid projects and things like this that come onto the ecosystem, it's going to create something which, you know, is going to be potentially insane inside of the marketplace. With the performances of a lot of these new projects, obviously people like their dog tokens, they like their all these other things. There's going to be probably something for everyone who's currently in crypto to come over to this new platform. And I think that alone should actually answer the question of just how many Ethereum projects are actually out there on the Ethereum chain. And they're not going to just ignore it. They are going to come, and their communities are going to talk about it inside of all these other chat channels that they all have. I'll come over here, and they're going to be trying to, you know, trade them and do what it is that they do, right? So yeah,
I truly believe that PulseChain can be a black swan event, and I know black swans by definition are inherently unpredictable, but it seems like an easy gamble for me personally. Okay, guys, we're at 1 hour. We'll take a couple of last questions and then we'll let Silver go. Thanks for your time so far, dude. But I'm going to keep you here for a couple more minutes. $4 HEX. Yeah, sure. Why not? Let's see. I think we might have answered everything. Oh, by the way, thank you for the tip, Crypto Keeper. Thank you very much. Smash the likes if you're awesome. Yeah, true. All right, man. Well, I guess we'll wrap things up unless you've got any more hot alpha, some hot, tasty little bites of info for us.
Yeah, I've got a few things, but I'm going to release it probably in a couple of days, something like that.
Okay. Right. So go follow this man, guys. Go follow.
If I say too much, it's definitely going to start affecting probably the price chart. So I want to make sure it's at the right time that I start to release certain things.
All right. Well, whatever that is, I'm bullish. Guys, Silver the Antidote. Follow him on YouTube, Twitter, whatever. Keep an eye on, his next group whenever that is available again. The people in there right now seem to be very happy with what they've, the information that they've got. And if you like technical stuff, if you like digging into, figuring out liquidity and whale watching, it's a fun hobby, not just on boats, but in the digital sphere as well. And just basically making fun of the occasional trade tard. If you want to learn chain analysis as well, this guy is your guy. So thanks a lot, guys. And I'll see you on the next one.